Welcome back. You're watching Trading Hour here on CNBC-TV18. The market has surged to the closing, is building on the gains as we speak. The Nifty is back above the 22,050 mark now. But let's shift focus now to the commodity space. Manisha Gupta is joining in, and today we are focusing on crude. Manisha, good morning. Is the boil in oil cooling down slightly now?
It is, yes, and that should be supportive for the equity markets here in the regions as well. Well, yes, after almost doing $88 a barrel, we are holding around 85 at this point in time. So nearly $2.5 off the kind of highs that the crude oil price has touched in this week itself. So markets are looking at a conversation about Gaza ceasefire possibility as early as in the next week, and that clearly has been a supportive, that clearly has led some pressure off the prices, and we are looking at some decline. Also, the US dollar strength has led to some profit taking across asset classes, including commodities as well. The markets also are looking at the fact that the demand numbers that have come in from Europe have been slightly on the weaker side, but as far as Asia and US go, the physical demand for crude and products is still on the higher side, is the reason $85 per barrel is still holding on your screens. The other thing is that with the kind of Ukraine attacks that we've seen on Russia facilities, nearly 10% of capacity is now offline, and that would continue to keep the prices on where they are. The street is also taking in the cognizance that the US inventories have seen a decline of nearly 1.9 million barrels. This is the biggest decline in US inventories in last 2 months. So while we are off the highs, but the markets do believe that at these current levels, you could be looking at a fair sustainability in the markets going forward. There are various reports from Wall Street brokers and banks suggesting that second and the third quarter could see demand improving even more from Asia, especially China, and 90 and 95 of a range is where most of them are working with.
Thank you very much for that. After going to 87, Brent has cooled down to about $85 per barrel. Perhaps that's what's explaining the outperformance partly of the Indian markets. Get into a break. We'll discuss market technicals. Jay Thakkar of ICICI Securities joins in with his top trading bets.